following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We start today like we usually do, looking at the German DAX. Looking at this 4-hour chart, you can see that we have now went back above the 12,000 level again in the DAX. It's making a ABC structure, as you can see. The $64 question is, how high is D going to be? That we won't worry too much about that. We will be focusing on the U.S. stock market today because we had a really big hold on just a second. Please refresh chart. Okay, 1 second, and I will refresh the chart. Just a second. I'm very good at refreshing charts if I get them in the right way. Hold on just a minute. Okay, I've got it. Now, bear with me here 1 second, and we'll be ready to go. There you go. Okay. I hope that helps. Anyway, we'll see if this is going to be working. Anyway, this is characteristics of many charts. These patterns look the same no matter what you're looking at. So this DAX has had one heck of a run here over these last few days. Looking, and this is a 4-hour chart, so each bar is 4 hours. So take 6 bars is 1 day. So that's what it's been going on today. And we had a beautiful 61% retracement in that on the opening yesterday, much like we did in our S&P that we talked about at the 2317 level. Now, let's just I've got to cover a couple of things that here we go with opinions again. A couple of things that look really interesting right now in perspective of what we're looking at. Let's just do the E-mini S&P first, because I know that's the one that you folks like to see the most. So we'll put this chart up here so you can take a look at it. We made that big ABCD down at the 1.618 expansion. That was at 2317. That was exactly 50% from the other low that we had going back to the I think it was right after the speech. No, it was right after the election. I think it was a 382 off the election. Anyway, it was a big ABCD there also. But you'll notice that the rally should take us to 2359. That's a 61% retracement of the high that we had in the middle of March. So watch that one very closely. If we get above the 2370 level, then it's got a chance to possibly make a new high. And it certainly has that possibility, because every time it's been shoved down, and remember the Dow was down 8 days in a row yesterday, so that was one of the reasons why you're looking at potential for a pretty good bounce. But again, we have to wait and see how much the bounce is going to be. Okay, now the question is getting on to the euro. As you recall, in the euro, we were looking for a potential, this thing to get up into this 109 and change level, just a little bit below 110. And as you can see here from yesterday's action, I didn't put yesterday's action's not in here, but we hit 109.30 yesterday, and now we've come off 160 points in a matter of 2 days. That tells us that ABCD structure is spot on. The first correction in this euro should stop right near where we're trading right now, around the 107.50 level, if it's any good. But this is the first day down after an ABCD pattern, so that can be very, very dangerous. But remember, when you trade these currencies, you don't have to risk an arm and a leg, folks. Usually 50 pips is a max. That's $500. You don't have to, you don't have to mortgage the farm to try to get into trade foreign currency. They make it very, very easy for you. The flexibility that you have is terrific. One of the main reasons people lose in foreign exchange trading is they put their stops too close, because this data comes from 13 banks, and their spreads can, vary widely. I mean, even with the euro, with a spread of about a half or 1 euro, you'll see spreads of 6 and 7 points in the middle of the night, and sometimes during the day too, where they're trying to pick off somebody that's got a stop that's too close. And they don't know that that stop is too close. They're just assuming that it is, because this data is pretty, well, they say it's held tightly to the vest, but again, I am not sure whether it's going to or not. Anyway, after we looked at this euro, let's just take a quick look at where we are right now. We'll bring it up here so you can see this is the first day down from the bigger ABCD correction. And that was, remember, that was where the 99 level was in the dollar index, which really very, very powerful number, because we've listened to John Logan talk about that area of confluence. I don't know if he calls it confluence or not. But if you'll take a look at this euro chart, folks, if you'll go back to the 13th of March, if you'll notice that high that was there, how many times the market came back and tested it, well, it's going to test it again pretty soon, and that's going to be exactly at a 61% retracement of that previous low. So that's why I think we've got some pretty good support coming in here, possibly at this 107.25, 107.30 level. I think we're trading 107.50 right now, and whether that's going to hold or not, I don't know, but that's one of the things I would be watching very, very closely, because this is still a relatively strong bull market, and you're going to get bounces all along the way. So that's going to be the first area of support. And if we go below that 107 level, that tells us that that big move in the euro is very, very important, and we are hitting much, much lower. And remember that our longer-term weekly chart on the euro measures to under 100, like 98 or something like that. And the euro at one time was all the way down to 80 and change twice in its history over the past 20-some years. So, this thing can really swing around. So we'll keep an eye on it. Maybe we can catch it on the downside if we can get it right. We'll see. Okay, that's the main thing we were talking about this morning. We want to cover gold when we get back. And then I had some questions that people have asked. Hopefully I'll be able to answer them, and we'll see if we can get some of this stuff done for today. I don't have any guests the remainder of this week. I believe I'm going to have someone, well, not next week, because next week we're going to do that special webinar with Rich Anderson, and one of the first people that Rich ever got in the business, Cy Lonely, and Cy is one of the largest land developers for farming in the United States. But 2% of that whole crop goes through his farm, so that's a lot of crop. Okay, all right. I think that's about it. I don't hear the beeper on the wall, but I guess we're up for a little break here, and then I'll come back and we will check with the gold market. I hope I'm doing this correctly. Oh, I'm in the dark. I'm in the dark.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed With TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. We're going to take a look at the gold market here. I put up a 4-hour chart, so each bar is 4 hours, so there's 6 bars in a day. Anyway, you can see that the gold has challenged this 1262 level. I'm going to update the chart because I still believe that we've got a chance for a correction in the gold. And believe me, folks, part of that is the fact that, I'm a sold-out bull, and that is and when the market goes up, it always leaves a little bit of a wonderment in your mind of how you could have missed that. But boy, it brings back a lot of memories from my days at Drexel, because I missed the last $200 of the up move in January of 1980, and boy, I tell you, you really understand the psychic of the human being when they talk about fear and greed when you get into trading gold. Alrighty, now what we want to look at now is, you can see this gold has been up here at this 1262 again. The old high was 1264. The silver now only made a 78% retracement, whereas gold retraced almost all of it, and platinum can barely get out of its way, only making a 382 retracement. So there's still that possibility that we're going to get a sell-off in the gold market, and believe me, I think it will be a really good buying opportunity if we do get one. And the market's usually will come to you if you have patience, but there is a possibility that if we break out of this 1265, 1270 level with a lot of power, we're going to be running in gold for quite some time. We'll have to figure out a way of catch a running start or catch a running market like that, because that's one of the reasons why you have to change your strategy when you're trading a weather market in grains or sugar, whatever it happens to be, as opposed to just a regular supply-demand market. A supply-demand market goes up in steps, goes up and pulls back, goes up and pulls back. When you get a really unusual situation like a weather market, the market will literally go vertical and just keep going vertical for 6 or 7 or 8 weeks, much like we've done here in the stock market. That was a new crop coming in, I guess, on January 21st. So that was the reason why the crop was growing so well. So we'll see how it keeps growing from this level. Okay, now the next thing that we wanted to talk about when we're talking about the gold and the silver, folks, is the fact that this Australian dollar that usually has a very, very high correlation, with the with the yellow metal, has really not responded the same way that we've seen in the metals themselves. So that's another reasoning I'm a little bit skeptical, because the foreign exchange market is far, far bigger than the gold and the silver markets, because that encompasses the whole world when you're trading foreign exchange. So we'll be watching this. So we should be higher this morning. The key levels to watch, as I mentioned before, are the let's try it again, 2360 level, 2359, 2360 level in the E-mini S&P, and the number right above that is 2370. Above 2370, folks, it's breaking out above the 61%, 78% retracement, and that would be bullish. But if you look at the Nasdaq, folks, the Nasdaq has already done that. So this is the big daddy rabbit, the one that's everybody's that's pulling the horses is the Nasdaq. Now remember, this is the Nasdaq 100, and you're talking about 20 stocks doing all this, boys and girls. 20 stocks is doing all of that action in the Nasdaq 100. So remember, that's not the full market. So don't get pulled into that trap. Just if you buy it, put a stop. If you sell it, pull a stop. Like the old man said, if I go long, I lose money. If I go short, I lose money. And if I don't trade, I miss a heck of an opportunity. Well, you don't have to be that way. Just try to pick your shots. And, if you're buying in an uptrend or selling in a downtrend, you're following the trend, and that's what you should be doing. So but you have to take the responsibility for the trade. There's no question about that. There's no other way. Someone's asked a question about one indicator that, it's actually a technical tool. It's not an indicator. It's called the volatility stop. And what it does is it measures the volatility of the bars that you're moving. So if the bars start to expand, really quickly, your volatility stop will take advantage of that trend that's going up. In other words, it keeps following it and following. The problem is when the market goes sideways, the volatility stop will it'll just eat your lunch. So the only time you can use volatility stop is when you have a very strong volatile market, and that's where it gets its name, volatility stop. I believe it was done by the first person to do it was Wells Wilder way back in the early 70s. And as I recall, I might be wrong on that, but that's what my old gray matter is reminding me of. So keep that in mind. The next one we need to pay a little bit of attention to this morning is the crude oil. It's really trying to hold its level, folks, but believe me, it's the jury's still out on this, and the jury's beginning to come in with little red pieces of paper signifying, this could be a guilty verdict. But if we get below that 47 level one more time in crude, we're trading $1.50 above it right now. But if we get below 47, that's going to be pretty nasty. Now, if you're looking to buy crude today, if crude is really bullish, and some people think it is, take a look at it down around the 48.15 level, down about another 30 cents. And then, if risk 30 cents, and if you're wrong, try to find another pattern. But if you want to get in something that could have a chance to run, your risk reward there is pretty good. So you're risking 300 to make at least 600 or possibly more. But remember, you don't want to risk more than 30 cents. And believe me, the crude oil trades in increments of 10 cents all day long. So unless there's a report in crude oil, you're going to see some pretty good ups and downs in this thing without any trouble at all. The heating oil has still not been able to get out of its own way. It doesn't look nearly as bullish as we thought it was going to. It stopped at those lows, but it's had virtually no bottoming, since that time frame. So I think that's another factor to keep in mind, that this is what you want to be looking at, because it's not running away to the upside, that's for sure. But if you do want to take a running something, or look at something, that would probably be one of the trades I'd be looking at today, would be to buy the crude oil at around that 48.15 level and not risk too much, and see how it goes. Anyway, that's a pretty good signal anyway. Okay, getting back to the wheat. Remember, we have Friday, we have the big planning intentions report, and that will be a biggie, boys, girls. Let me tell you, that is going to be, everybody's expecting some really amazing things in this report, and because they're looking to plant more and more and more to increase the acreage when we've got these surplus crops. I don't understand. Wow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, this is the crude oil chart that we were just chatting about. As you can see, it was trading around the 48.14 a little while ago. We've been up to as high as, I think we hit the 49 level and then backed off a little bit. So this has got a chance, folks, if it can hold these levels. Now, heating oil went below it a little bit and then snapped back, but right now the crude oil is leading the pack. So if it can stay above this 48, 49 level, it's got a really good chance of doing something really spectacular to the upside, would be my guess. Now I'll have to double check here. A few of my alerts are going off this morning, so stocks are doing very little. Yeah, not much. Okay, that's about it. I want to check the bonds. Bonds, I'd like to see them get a little bit higher so they could possibly be sold. Missed the sale yesterday in the bonds, folks, by 2 points. That was a tough one to let get by. We didn't get that one, but the others are hanging in there okay. Keep an eye on these hogs, folks. We talked about those yesterday. They've got a real chance. It's a real Gartley pattern there. I don't want to bring it up too much, but it's got a real good chance of making a pretty good move in some of these things if we pay attention to them. And remember that you can trade hogs easily because it's not the size of the corn market or anything like that, but it's a nice little trading market. You can use a stop of $400, and so that's it. This is the first ABCD pattern that we've had in hogs since they bottomed last December when we had Rich Anderson on, and he was telling us the fact that they were below the cost of production back then. And not only that, they were making a beautiful ABCD pattern to the downside, both cattle and hogs. And Rich was spot on that, as was Mr. Z, who's in our room for the Tiger Den, which is always helpful with all the other fellows that are in there. Folks, they got some really smart guys in there that give some good information. Now, some of it's really bad now, and just like mine is, so when that happens, you have to take responsibility for whether it's me or whoever it happens to be. I think Basil is back today from his trips. He'll probably have some interesting stories, and he has some really great information to go through now. But right now, the market's just backing and filling early this morning. We did hit the fib number yesterday in the S&P, folks. We did get to that 2359, so that might be all you get as far as a rally, because you were down 7 days, you rallied back in 2 days, so that if it's really bearish, you're not going to get much more of a rally. But if you can get it above the 2370, then you've got a chance for this thing to go up and make possibly another new high. I don't think we're going to see it in the New York Stock Exchange Index or the Dow Jones futures or anything like that. The Dow Jones futures, if we take a look at this one, let's just put this up, you'll see this barely is making a 382 retracement of the whole move down from 21,000. See, it dropped 800 points, and we've only been back 300 points. So we're just making a 38% retracement here in the Dow Jones, whereas the NASDAQ, you've gone up and you've touched the 78% level. But that's only 20 stocks, and that's why it makes it real difficult to try to compare apples and oranges, because they can't be compared that way. There's just no other way that you can possibly do it. So. Someone's asking a question about the euro. Folks, on the euro, the support zone, I showed it earlier, it comes in right around that 107 level. That's down about 200, almost 240 pips from the high. And the thing is, it's coming off so fast. You see, we've come from in just 2 days, we've come down from 109.30 and change, which was the big ABCD pattern, and now we're down. We're almost 200 pips lower. So let's pay attention to it when it gets down here. So it'll be very interesting to see what's going to happen. Someone's asked a question. I would not go into that grain report with a open positions, folks. I would try to spot, this is one of the things I try to do for the 24/7 service, is to set up a strategy saying, okay, this is where the grains are going to come in today. This is where I would be looking to buy it on the upside and sell it, or buy it on the downside and sell it on the upside by looking at price extremes. That's one of the things I'll be working on tomorrow before the report comes in on Friday. So that'll be, it's going to be a big report. It'll affect what's going to happen through the growing season. And, we always have at least one or two crop scares in the market whenever we're dealing with these particular things. Someone's asking a quick question. Let me see where it's trading, and I'll tell you. Yeah, the price in the crude oil. The price in the crude oil that I was talking about is 48.15. That's the number to take a look at. 48.15. That should be good. That should be good support in the crude oil. That's based on my oscillating oscillator and my 500-day and 250-day moving average crossover studies that I used extensively in my trading in olive oil in Bangladesh back in 1968. Okay, let's go. Let's go on to the next question. We will. Yes, of course, I'm teasing. Yes, I know. Yeah, well, folks, well, thank you. But what you really got to do, folks, is when when I do this report here like this, I mean, I really enjoy it because I met so many nice people. I mean, oh my gosh, I mean, it's just one after another, and which is really. And in fact, we're having one of the dinners is coming out tomorrow and is treating Mr. Archibald Arrington Hicks Crawford and myself and my little princess to a lunch, and so he'll report back to us, I'll guess. Okay, let's move on to the rest of the markets. First of all, we have this big report coming due. If you're in some wheat today, folks, look to at least protect yourself on the wheat. It's up about 5 cents from the buy price, but be careful because this report could cause a lot of problems. I would suggest, if you're not an experienced trader, is to just stand aside. That's what my game plan is going to be, is just take the profit in the wheat and then wait and look at it again, in the report on Friday. The report on Friday will have some really good swings in it, and that's what we're trying to simulate right now. I'm working along that with Rich Anderson and also with another fellow out of Chicago that does a lot of farming and stuff. So that's what we're watching here for some of these others. Well, the market is very quiet so far this morning. In fact, extremely so. Looks like we got the Dow. It looks like the NASDAQ actually sold off a little bit. You sure that's the right quote? Might be wrong on that one. Hold on 1 second, please. Oh, that was bad data. The NASDAQ is up. Sorry. Okay, we have one other one here to go through. Another question. Oh, all right, we'll be back. 877-927-6648.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I want to switch over to take a look here at this Dow Jones Industrial Average on a daily chart here, just to show you what I'm looking at as far as these gaps. I believe that all these gaps will be filled because we've not had any gaps that weren't filled. In fact, there's one way back at Brexit. If you look at back on the 27th, we gapped up and left a big gap on the Dow Jones, back in that area too. So that's another gap that's there, but that's down 1,000 points, 3,000 points. But anyway, the second gap has been filled. That's the one at 20,640. The third gap is the one we're working on now, which is 20,270. That would be another 300 points lower than the lowest low that we made this past week, where after we had that 7 down day move in the Dow Jones. So those are the the numbers that I'm looking at. The Dow right now is by far the weakest. The Nasdaq is the strongest. You can see that by just looking at the charts. I mean, you don't have to be a rocket scientist to realize that they've been going up. What we've done now is we've put a little bit of a base pattern here at this 2317 level yesterday, because it was right at that 50% and 1.27 expansion numbers, and also had an ABCD structure to the downside. In fact, we should push this up again just to show everyone that that's what we were looking at when we were watching this yesterday, and we made a double bottom from our Monday night sell-off. So this is the reason why we have some resistance here. This would be nothing more than another rally like we had in that 3-day rally, back in mid-March. So that's another one that we'll keep an eye on very, very closely. Okay, now one other question that someone asked me about is, do I use any indicators at all? Hold on one second, please. No, I don't use any indicators at all. I don't use a stochastic or relative strength, MACD. I've looked at those over the years, and I've seen lots of different types of data, but frankly, I look at the patterns because pattern recognition is a leading indicator. It's not a lagging indicator that you have when you're looking at oscillators, because they're just taking data in the past and saying this is what's happened in the past, whereas with pattern recognition, you're at a point where you think is the future, future, either rightly or wrongly. But this is, what you're watching when you're looking at patterns, and they do give you an edge. But there's a lot of different ways to skin the cat, folks. I meant that in the Freudian sense for all you ASAPC people out there that want to throw rocks at me. I'm just joking, folks. Anyway, the main thing is that we want to keep an eye very, very closely on some of these things because they're at the moment of truth. Basically, in the stock market, even the bond market, we had that really strong rally to 152, 03, and it's really very interesting to see if it's going to get back above that because we sold off pretty strongly over the past 2 days. We dropped over 2 handles in that, so it's very interesting whether that's going to be the safe. Do you realize that we have April Fools coming up here, folks, on Saturday? It's going to be really interesting, So we'll have a lot of fun here no matter what happens with these markets, but it looks at what's going on right away. This is the most beautiful time in the desert, folks, by the way, because of the weather is about 80 every day and just as sunny as you could possibly ask for. Okay, another question that someone has asked me is about the Japanese yen, and we want to take a look at that. I don't think much has changed here. We had a little bit of a rally and then a sell-off. Remember, the market is extremely oversold in this one. It really is. So it would not be unusual to see the market rally up to that 113 level because this is a daily chart. But, so far we haven't been able to get it above the 111.60 level last night, and now we've started down again. We're trading below the substantially below the 111 level. So this market is still heading to the downside in the Japanese yen. That will be affecting a lot of different things. But if we get this thing down to about the 108 level, we want to keep a really close eye on it for, we got a caller from Philadelphia. John, are you there?
Good morning, Larry. We're looking forward to that webinar with Rich Anderson next week. That'll be terrific.
Yeah, we're going to have a special guest, Sim Only from Sylvia's Financial. He's a huge farmer. He has about 2% of all the production in the United States. He's going to be our guest, and his specialty is options. And boy, he really knows how to leverage options. So that'll be a fun part for me because I don't know enough about options. Anyway, let's get on to your question. What can I help you with, my friend?
I wanted to ask you, please, about the chart pattern that you're seeing in the wheat futures, specifically the July wheat.
Yes.
And I know you had done some probing last week. I actually bought the July wheat, the Chicago wheat, yesterday morning. And it's fallen right into 935, 435, 430.
Yes.
And I'm wondering I'm inclined to want to hold this through the report, taking the risk. And actually, let me share this with you. The wheat is far less impacted by Friday's data because everybody already knows how much wheat has been planted. That's already in the ground. It's the corn and the beans where new data comes up. So, but back to that question, holding wheat through that report, pattern-wise, do you see that as a good idea or not?
Well, it's okay for you, John, because you know how to handle it. But most people, when the report comes out, it's so crazy. And I know the wheat's not going to be affected as much, but they're looking at such incredible numbers in the corn and the beans that it's going to be a pretty wild report. So I think there's going to be some, a potential there, but how much, I don't know. What I'm going to do, John, is I'm just going to keep my stop working in the wheat because it has a lot of support down there, I would think, and the worst could happen is you get a bad fill or something, but at least it started 4 cents in the right direction. But I don't know what's going to happen, but it's going to be a big report no matter what.
Right, very good. Okay, well, thank you for that. I'm looking at the chart pattern as you diagrammed it in Tiger TV. So thank you for that. One last thing I just have to share with you. I'm just, for those people who are in the Tiger's Den, TFNN's traders room, they'll be able to see this. And anybody who's just listening, I encourage to get in there. And what I wanted to just show is an example from last year, which was Deese corn. And in the time frame of this coming report, the planting intentions report, that's always released the last day of March by the USDA on estimates for acres planted in the upcoming season. And what I just posted was the December... Oh.
Okay, hang on.
Will do.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, and we're talking with Mr. Z from the Den, and we were talking about the grains. John, you want to go ahead and finish up?
Yes, I sure do, Larry. This is what I want to describe here, and I've shown chart-wise in the Tiger's Den, is just a textbook example of employing tools that you teach to making money speculating. So it has to do with last year's experience surrounding the March 31st planting intentions report in the grains. And December corn at that point in time was trading at $3.85 the day before the report. The report came out. The data was surprising last year in that planted acres estimate for corn was greater than the trade had expected, and so there was selling in the December 2016 corn futures. It was quite hard, big sell-off. The following day, the Friday, that was April 1st, that contract made its low for the year. So that is an example, first off, of just standing aside, waiting for a reaction to the report, as compared to taking a position in advance of it. That's number one. Number two, you have taught us, and many, the benefit of using patterns and fib numbers, and that Dee's corn contract last year, which is posted in the Tiger's Den now, declined to a low of 365, this is last year, and made a textbook butterfly to a bottom pattern in which that 365 mark was a Fibonacci 1272 expansion mark. So the pattern was perfect. The fib number price hit was perfect, and it came in reaction to a big report. So I just have to tell you, this is a textbook example. I took it, and I thank you for all you do.
Hey, thanks a lot for calling in, John. We certainly appreciate it, my friend. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.